Okay, I'm a Bengali, but I've been brought up in Delhi. Now, there's apparently a saying, I can be corrected. The saying goes that हम दूध के जले हैं, छाछ भी फूक फूक के पीते हैं. Now, if that is true, how do you ensure that the first time guy who's coming into mutual funds doesn't have a bad experience and bad mouths the whole product class? It will be a very dishonest person in this room who will say that this hasn't happened in the past.
No, it happens, and I think before we started this discussion, the entire previous discussion was on pull and push, and mutual funds are push product, and they will stay push product. Now, what has happened is that as a industry and as advisors, we continuously focus towards maximizing returns. How do I give him a product where I can say that, listen, you're going to make 10%, 12%, 15% return, right? Instead of that, to the existing investor as well as new investor, if we start focusing on probability of making the expected return, right? The guy does not know how much money he wants to make. What is his return expectation is beat the FD or give me something better than a fixed deposit because that's my alternative. So what is the probability that I will or I should assign to a product which will actually do returns in line with that expectation, right? If we can get that number right, then chasing 14-15% is our aspiration, not his aspiration. It is something which is in our mind and we keep on telling them. So when we onboard this new customer, very, very important that we use the fixed income platform right now to get him on board, let him try, let him test, let him understand the safety, liquidity, returns, and the convenience of dealing with us. Volatile times will be there. So my advice to the fraternity over here is that onboard them with products which are more simpler for them to understand, and over a period of time do graduate them to better products, right? Work with them on which products which will give much more predictable return or returns which match the probability of getting his expectation in lines at this point of time.
Okay, continuing a little bit more on the trust bit, there's been a lot of tom-tomming about our demographic dividend, how you're going to conquer the world with the youth, so many young people coming in and getting jobs. Last I heard, a lot of people were getting fired. So anyway, coming back, if demographic dividend is something really, really happening with lots of young people coming and getting into jobs, obviously there's a huge opportunity for the mutual fund industry. Now, what I wanted to know, again, it's coming back to the trust. How do you get these guys to trust mutual funds when they have never seen their dads investing in them? You've got a dad back at home or mom back at home and saying that, what do you mean? You're investing in something which you don't know what you're going to get? Are there practical tips which the advisors could, because that's a potential area again.
Yeah, then, first of all, I would like to call all of you not advisors but doctors. I think last few months, I think it's been a great monsoon for India, and most of us are kind of ailing with some or the other health problems. I think we all rush to the doctor to even get a cure for our simple cold and cough. Imagine the state of investors who have gone through such tough times in the last 3, 4, 5 years. I think they are really looking forward to a lot of comfort from all of you, and which is required because mutual funds don't assure returns, and it's subject to vagaries of markets. So I guess all of you should treat yourself, or rather consider yourself as doctors to your investors and not just advisors. Coming back to Udayan's question about the demographic dividend, I think the basis of our Indian structural growth story is nothing but demographics. I think too much has been said about 5% GDP growth and lower than that and stuff like that. But if you see the decadal growth rate of India over the last 5 decades, it's growing from 5, 6, 7, 8, so on and so forth. So this is one year which we have seen a sub 6% growth due to tough conditions both internationally, locally. But the basis will continue to remain the demographics. I just read some report in one of these business newspapers a couple of days back, which spoke about financial literacy in India, which is the lowest among all Asian Pacific countries, but I was surprised to see Japan below us. I still wonder, a developed country like Japan has low financial literacy, so it was encouraging to see there is someone below us, someone as Japan. And another related report spoke about India and China's financial literacy, and it was very surprising to note that people in India below 30 years of age group are more financially literate than the elder generation, which is very contrary to what we saw in China or even other developed nations where people as they age, in their mid 30s, 40s, 50s, they are more financially literate. But surprisingly, we saw in India it was less than 30%. I mean, less than 30 years of age group was more financially literate. So I guess when I come across several young individuals, they have SIPs and they are aware of SIPs as a concept. People who work in corporate India. And going back to all our other panelists who mentioned that the starting point for most investors has to be fixed income. I think we need to understand that we save roughly about 30-35% of our savings as GDP, and roughly 10% of the GDP goes into household financial savings, and that number is close to 10 lakh crores every year. I think what we're forgetting is that 95% of this money goes in fixed income, and that is where, like people out here mentioned, that we need to start from step one, which is fixed income. And we have done some analysis over the last rolling 1 year returns of short-term plans of the industry on an average have beaten a fixed deposit for 1 year on 80% of the occasions. I think if we start with products like FMP, short-term plans, I think that's the starting point. And one thing we need to realize that getting money into fixed income is the starting point. But when it comes to young generation, I think we need to push only SIPs. I think, let me give you some statistics. Over the last 6-7 months, if you go back to Jan-Feb this year, mutual fund industry saw close to 6,000 crores of gross inflows into equity funds, and of which 1,500 crores was SIPs. Today, the gross inflows have shrunk to 3,000 crores, but the SIP number hasn't changed significantly. So what that tells you, that when you take the emotion out of investing, investors don't mind continuing their SIPs, but when it comes to lump sum, it gets that much more difficult. So I guess for first-time investors, I think we should not get into lump sum equity selling because people are not prepared for huge volatility. So I think if you talk to a young guy, I think it has to be just SIPs, nothing else. I mean, I know 2 large distributors in the country who have built substantial SIP books. I don't think I need to name them. They are very large players. One is a national distributor, one is a bank. And through their branch network, simple SIP selling, and we see in our own books, about 50% of their gross sales comes only through SIPs, and this number only keeps growing as we move forward. And before I hand over back to Udayan, I would like to mention one saying from Albert Einstein. He says, doing the same thing over and over again and expecting a different result is called insanity. Okay, so what we've seen investors over the last 2, 3, 5 years, they only chase returns, and investors who buy schemes or funds based on past performance, they don't end up getting returns. So this is something that we need to learn. And one last thing that I would like to just mention here is, I think if we deal with investors, we realize that everyone wants to get rich by investing, but we see that majority of investors don't get rich by investing. It is purely because of this bad timing of entry and exit, or not investing at the right time.
Okay, we're going to come back to the audience in a short while, and we'll need about 10 questions from that side because people are talking, and unless they ask 10 questions, they're not going to get to have lunch. So before that, before we go to the audience, what I wanted to say is, the perspective is this. When I was studying, and I had a finance professor, so he trained in the US, so he was talking about uncertainty. He was explaining uncertainty. So he said that, in the US, when you go to work in the morning, you quite don't know whether you have the job or not. There could be a envelope waiting for you to tell you to pack off. When you go back home, you're not quite sure whether your wife is going to be there, because if she has got the information, she might have just fled. No judgments out here. Nobody likes unpredictability. But how do you actually, mutual funds, when you're selling them, when you're making a pitch, when you're trying to persuade people to invest in mutual funds, you cannot really misrepresent and say that this is going to be a return. And we have a practical problem where most of the investors are used to predictability. How does an advisor bridge that gap? It's a phenomenal thing to do. Are there practical things, are there things that people have learned, things that you can share with them?
Sure. Thanks, Udayan. I think it's a very relevant question, and thank you so much for it. Indeed, the whole concept of the theme of this meet of MFRT, fifth MFRT, the theme tagline we carry is informed investor and responsible advisor. Probably the problem we address in the first one, if the investor is informed, half of our problems are solved. And probably most of our discussions when we say either we are talking about CAGR or we are talking about the percentage of returns or I can give 2 bips more, what we are communicating to us. Probably I can put on the second line, it is not, what is that, we said, we can take him to the empowered advisor. Advisor need to get empowered, get away from this concept of returns and get back to the investors, what investors needs. And I go back to my own story. I started my mutual fund career little over 20 years. In 92, when I was taking the panel of interview for me to get into the mutual funds, I am basically a dairy technologist, and I was working with National Dairy Development Board as a project officer on the White Revolution. And the interview board member, the trustee was our then AMP chairman. He was executive trustee of our asset management company, Mr. Kurian, AP Kurian. AP Kurian, the moment I entered the interview board, he said, Mr. Rao, you are highly relevant candidate for me. You are a dairy technologist. I'm a mutual fund guy. How just you can give me one answer so that I can have you the employment here. And I do not have an answer. So I agreed, Mr. Kurian, you are perfectly right. And I am irrelevant to this profession. But I would like to say something. I am also working currently with another Kurian years in this. I mean, same name. But he keeps telling us on the White Revolution in India, cows don't give milk, you need to extract. And then I gave an answer to him, people won't invest, we need to extract. And we need to convert those savings to investment and into the mutual funds. And the opportunity lies us, we cannot extract from the investor, but we can give the investor an education to him, what is that he can do, and let us not talk about the returns, let us talk about what he can do over a period of long term. And unfortunately or fortunately, last year when I was in Mumbai in one of the forums, we talked about it. Now mutual funds have become really long term, even liquid funds started giving negative return. And that is the time, it is the time for us to educate how we can talk about a long term and how we can talk about the investor and relevance of the investor. And all our things, what we need to do, there are two kinds. I think, let us get away from the negativity and let us get into the positivity. And when we all say 3%, 4% of the people penetration, today the negative experience with the 4% of the people, but 96% of the people on the sidelines, they have not experienced anything. Have we done something to them? Then the first kind of people who got a negative experience, let us go back, let us make all our education stuff in a such way, we can give reassurance to him, what went right and what went wrong, and together we can own. Probably today is a friendship day. I think 3 of us need to become friends. One is the institutions sitting this side, intermediaries sitting this side, and investors sitting outside. Let us come together, have that friendship. I'm sure this industry we can make wonders. And this to make industry wonders, make investor more informed, and let us work on that. I don't think we need a strategy which is different. We need a common sense which can be much more uncommon. Get to the investor and make them more. I think yesterday in one of the panelists, in one of the discussions we said, I think Uma Shashikant, she said, in 2002, 2003, 2004, what was the bank return? And what is that? At that time, investors were asking what? Let us go back to the investor and let us not create that expectations. All we went wrong is we created an expectations having not met the expectations. That's where we failed. And let us create a right expectation. As Amar said, we can have a right onboarding of the investor. While the onboarding of the investor, let us make him more educated. I think that's an answer I look at.
Okay. On that note, now we are ready for fun and games to begin. We can throw open the floor to the audience, and the question need not be friendly, although the tone has been friendly. Please, sir. Yeah, you need a mic. Sir needs a mic. One mic can be given. Yeah. Sorry for making you run around, but this will be. Maybe you can, introduce yourself and ask the question not to me, to the panelists.
Okay. My name is Deepak Khemani. I'm from Mumbai. Okay. This is less of a question, more of a statement. It's a real life incident which happened 2 months ago. One of the very big AMCs whose name is there on top started their investor education program in Mumbai. Okay. So around 50 to 80 people are sitting in this hall. They started their program. Big presentation was given. This is debt, this is equity, this is what we do. So many thousands of crores we are managing. After the presentation got over, they asked that, do you have any questions? One senior citizen person got up from the audience and asked, how much are you giving extra to senior citizens?
How much extra?
Now, either he didn't understand what these guys are trying to explain to him, or these guys were unable to get across to the investor what a mutual fund is. Investor awareness program kick-started from Mumbai, considered to be a financially, financial hub of Bombay and, informed investors. This is what is happening. So I don't expect any answer. As I said, it's not a question, it was just a statement.
Yeah, sure, please. Yeah. We'll come to you. We'll come to you.
Indeed, first of all, I appreciate your question for taking the statement. It is not exactly a question, but it is a reflection, absolute reflection. And reflection is what? Today we are all spending 2 bips of investors' money for 2 things. It is not our money. It is an investor's money we are charging from the investor and paying it. And to educate the investor who is no more an investor as of now. And the senior citizen asking a 5 bips more or what extra, because every bank where we look at senior citizens gets extra, that is what caught in his mind. And when we do our investor education, what we talk? We go and talk about mutual fund. Mutual fund, how much is relevant in his life for him? When we talk to an individual, can we talk personal financial management in a full parlance? Then mutual fund, you package it in such a way so that I can create a need of the financial advisor rather than the need of the financial investment. First, I create an advisor. Advisor is a need for the investor. Then the financial advice. I think mutual fund comes at the last leg. Probably we are giving at the first leg. I think in the previous presentation, Karan said what investor is looking at, what we are giving. We are giving a mismatch. Even in our communication, we are doing something. I think it's a question to introspect. Probably we all need to sit when we are doing our investor education programs, how we can make more relevance, and it is a real education rather than the marketing thing. And we have onus of responsibility. These 2 bits what we are spending is not asset management money, it is the investors' money, and we need to be responsible for it. I agree with it. Thank you so much.
So please.
Yeah, good afternoon. First of all, let me congratulate MFRT and particularly Kanak and all these teams, that every time we came to MFRT and we get new things in that. I'm Mukesh Othani from Nasik, and I'm a very big fan of Udayan whenever I read his editorial in a magazine. And as a good panelist over here, and I want to share my some basic question which I got every time from the investors. Second thing, we already mentioned in every mutual fund prospect that this is subject to market risk. Now the question arises over here that investor also ask, we are also asking to the regulatories, if this is a market risk carries, why regulator not mention, why regulatory not order to the stockbroker that you should mention in a demat statement also, that this demat account will carry the market risk? Why you are not saying to the IRDA chairman that ULIP policy is subject to market risk? Why you always give the stepbrother treatment to the mutual fund industries? We don't have any answer for that. I may be wrong if you correct me. Yeah, 1 minute, clear my. Today, mutual fund market is $26 trillion market world over. And still we are so happy that we have only 8 billion. Somewhere we have to introspect. Why people are not coming in this field? My son is double MBA, and he told me that, Papa, I don't want to make my career in a begging industries. This is a beggar industries. You want to fee from the client. See, Indian mentality is not giving the fee. That is only limited up to T15, not B15. Somewhere we have to introspect that thing.
Let me react to this. You just made a fabulous point, I think. Yesterday, I think I was discussing with Mr. Sinha, and we were just reflecting on the number of people who have actually gone out of the industry. And in gathering after gathering, there's this whole discussion how you can get good people coming into the industry, being the doctors, financial doctors that's being mentioned, and people who see this as a long-term viable thing, passion, professionalism, all that has been mentioned, and that's probably a huge, huge requirement. I completely agree with you. Second is it's an opinion. People may disagree. I personally feel, it's my personal opinion, of course, I do feel that in this industry, the regulations are probably far too sophisticated, as if, other things are, it's as if you have an engine which is moving fast, but the track and the bogies are not up to speed. So that is possibly one of the things, it's a personal opinion, as an observer, I think. But sir, I would come back to your query. Yeah, you can also have the mic. Everybody can hear. बिल्कुल.
माइसेल्फ संतोष बजाज फ्रॉम रायपुर छत्तीसगढ़. जनरली जैसे साहब ने कहा कि एंट्री बैरियर्स है, एंट्री बैरियर्स के साथ हम हमेशा परफॉर्मेंस की भी बात करते हैं. एसेट एलोकेशन हम सभी से सुनते हैं, फाइनेंशियल प्लानिंग में भी यही चीज़ आती है. 2006 में सारी एएमसीज ने हल्ला किया, इक्विटी बेचिए. 2008 में मार्केट धराशायी हो गया. 2010 आया, गोल्ड बेचिए. 2011 में गोल्ड ने परफॉर्म नहीं किया. 2011 में डेट बोले, लिक्विड तक नेगेटिव चला गया. व्हाट इज द नेक्स्ट? बस मैं यही पूछ रहा हूँ कि दूसरा और नया कौन सा प्रोडक्ट आने वाला है जिसको आप बेचने के लिए हमें उत्साहित करने वाले हैं, मोटिवेट करने वाले हैं, ताकि वी शुड गेट मोटिवेटेड फ्रॉम हियर, प्लीज.
Yeah, I think this deserves a response from the various panelists.
Yeah, sure. I think let's not take the humor aside. I mean, these are serious questions, but I think let's look beyond. I think we have a chance. If all of you, 550 people, have spent money from your pocket and traveled few hundred to few thousand kilometers to be sitting in this room to hear us, we want to be in this business. Let's be very clear about that. Okay? If we want to be in this business, hurdles will come. Let's not make, if you are an insurance agent, you know there are hurdles from IRDA also. If you are a banker, there are hurdles from that bank also. Documentation will continue to be stricter and stronger. The question is that, do we believe that investment is important for individuals? Because a bank at 4% or 8% is not going to beat inflation. I think if we are convinced about this, I think then we can face any customer, any client, anybody, irrespective of whatever regulations are brought about by whoever that is there. Number two, yes, we have made mistakes. We sold the wrong products at the wrong time because we also pushed it. The question to ask is, we made mistakes. Have we learned from the mistakes? Are we going towards financial planning? Are we talking to investors for the long term? Are we talking for their future retirement planning, children's marriage, education, and giving them those products? I think I know of a distributor in Hubli who sells only 10-year SIPs. If any person comes to his office and say, no, I don't want minimum 10 years, then he says, sorry, you're not my customer, please go away, because over 10 years I am very comfortable, irrespective of the ups and downs, you will get a good return which beats inflation. I think that kind of conviction needs to be there. If any of those customers decide to stop their SIP midway, he says, you are no more my customer, please don't come to me for advice, please go to anybody else. Do we have the conviction to throw out the investor if he is not listening to sound advice? I say we have made mistakes, let's be honest, all of us have. But if we learn from them and if we really go ahead, I don't think any documentation, any paperwork can stop us because 80% or 90% of India today has not invested in mutual funds. They don't know the past. So if you don't know the past, you can start with a new future. I think that is very important. I am very optimistic about the industry.
Okay, one more reaction from the panel and then there are three questions. You need to get all the questions. We need to at least have 10 questions.
Yeah, only one small thing. आपने सोने की बात करी कि आपने सोना आया तो आपने सोना पुश किया. आप घर पे फिजिकल सोना खरीदते हैं सारे. यहाँ पर अब ऐसा मत बोलिएगा बिकॉज आप नहीं खरीदते होंगे तो घर में बीवी जरूर खरीदती होगी, राइट? तो ऑल ऑफ अस बाय गोल्ड. नाउ जस्ट ए स्मॉल नंबर फॉर नॉट ए रिएक्शन टू दिस थिंग बट ए स्मॉल नंबर. इंडिया में वी हैव अबाउट 50 लाख करोड़ ऑफ गोल्ड रफली. जो पिछले 6 महीने में जब करेक्शन आया तो 15 से 20% करेक्शन आया. 50 लाख पे 10 लाख रुपया उड़ गया. क्या आप सारा सोना लेके मैदान में आ गए बेचने के लिए? So I think the point what we, and therein the role of advisor would come in. You know, we as a manufacturer, and I can tell you with lot of conviction and lot of things, whenever we sell, now obviously we are evolving, lot of things are happening, but let me take an example. We sold gold in a big way. If you go back and look at the presentations, all the materials, it was always mentioned that, you know, you should have not more than 10% allocation or 5% allocation in the portfolios. Was it mentioned? Now, if you are not worried about your physical gold, I am not worried about it. I bought SIPs for my daughter's marriage because my expectation was clear. If rather than buying physical gold, I am buying gold in a paper format because I need gold after 20 years for my daughter's marriage. I am not worried. Why is your client worried? Why are you worried? Did you sell in a wrong way? I think those few questions we will have to consciously ask each other and then evolve. I am saying nothing is right or wrong. Liquid fund has given negative return. Fair. It is. You know, there is an aberration which has happened in the last 15 years. After that, it has given negative return. But do you know today? So, for example, again it's being repriced. It is now giving. So, what was giving? You know, before 15th of July, if it was giving 8%, it is now giving 10.5%. Now the problem is the person who has to get 10.5% is no longer there, or that communication with that person is stopped because a partner or a manufacturer has not convinced or communicated with him enough, saying that this was an event which was there, but today you are getting 10.5%. Just go and see the return what was happening, 15 days back, and then you will have an answer, right?
Okay. We will. Yeah.
Now this gold fund, there is an aberration that the gold fund, you said gold, when gold prices fell, there were queues in front of jewelers' shop to buy gold, and there was redemption in mutual fund industry. Why so? So we have erred somewhere. Okay, so we have to sell properly.
Okay, I know what the last question. I'll take the last question. I'll ask the last question. No, sir, ma'am, I will just come back to you. The last question which I wanted to ask the panel, that is after all these questions would be asked, I wanted you to think about it. In the past couple of years, everybody's been buying gold and property, and there's this whole mindset, कि वहाँ पे तो पैसा डूब ही नहीं सकता, ठीक है? Now, mutual fund is actually competing with that mindset as well. So how, maybe we can end with some tips. Maybe you can keep thinking as you answer these questions. But we'll come to ma'am. Why don't you? And then we'll come to you, sir. We'll come to you.
I have a question.
Yeah.
See, my name is Vasudevan. I'm from Chennai. I've been listening about a lot about this investor education and setting aside money for investor education. But looking at history, repeatedly we continue to see this investor behavior. 21,000 they're comfortable investing, 8,500 they're redeeming, right? We are all witness to that. And typically even from the AMC front, whenever there is no inflow into equity, they are comfortable coming up with an FMP or with a debt fund or some other product, which probably is not need of the hour, but still AMCs do come up with that kind of product. Now, my question to you is, there is a lot of talk about investor education. AMCs cannot directly get into investor education. It is distributors who should do the job of investor education. Now, if we are, say for instance, just now you quoted that, people are buying physical gold, but there is a redemption of paper gold. Why is this happening? Because as investment advisors, our job is to not manage investment. You are better off doing that. No, we cannot do that. Our job is to manage investors. And let me say that we are not equipped to do that. So the training from your end should be to train us to understand investor behavior and to handle them. How do we handle the investors? That's where the training starts from. My question to you is, are you all working in that direction? What are the kind of program that you have to empower? I don't want the same debt. This is debt, this is equity, this happens when debt goes up, comes down. We don't want to know that. We trust you. You are good at that. You are fund managers. We are not. All that we need is, we need to empower ourselves with investor management. What is the kind of program that you have developed in your AMCs, respective AMCs?
Maybe my panelists on my right would might like to answer. Yeah.
What as a fund house we realize is that, okay, while you said that you don't want to know what is debt and equity, but we think that both parts are important. Or rather, there are three parts to the training that we think are important. And in various parts of countries with we already have an in-house trainer who continues to travel and keeps on training the IFA fraternity or the bank RMs in terms of technical training. But there are other two parts of training that we cover, and we cover that very, very locally with a local partner over there. One is how do we help and what kind of a tools that we give you in form of training to do your business better, right? So right from discipline, if for example, internally we have this process of recording every conversation, recording every customer interaction, right? How do we follow it up with that? How do we close a case, right? So there are tools and there are trainings that we do which help the distribution to manage business in such a way, because at the end of it, all you guys